For me, the value isn't in the technology or the AI hype, or the value is in the problem you're solving for the consumer and whether he's prepared to pay for it. And if he is, you've got a product if it's profitable. If I look at what we're doing today, it's no different to what we did in the 90s. It's just we're using different technology.
Welcome, builders, to How Would You Build It? The podcast that dives deep into the dynamic world of startups and product creation right here in South Africa and Africa. This show is more than just interviews. Every week, we sit down with the brilliant minds to provide a masterclass for building digital products amidst the challenges and opportunities unique to our continent. From seasoned founders to dynamic product managers, we uncover the unique stories and strategies behind some of the most innovative digital products being built. So for all the aspiring founders and product builders out there, you'll discover that each episode is a wealth of practical wisdom and local and actionable insights. Make sure to subscribe or follow wherever you listen to our podcasts and connect with us on social media for even more content. Now, let's dive into today's episode. Welcome, builders, to another episode of How Would You Build It? It's episode 73. Moving along nicely. Rainier, welcome back again after a nice, tough rugby match. Still got your nails together there?
Yeah, barely, Bobby. It's lucky to be here, and I'm excited to talk to one of the FinTech OGs in South Africa.
Yeah, I was having a look at the portfolio and I got very excited. So, Anton, thank you for joining. You are the co-founder of Crossfin. Thank you for joining us.
Thanks, Bobby. Yeah, I'm excited to be here.
Fantastic. As we always do when we start off our podcast, Anton, we just want to get a very quick elevator pitch. Can you just, for the viewers that might not be familiar with Crossfin and what you guys do, can you just give us that elevator pitch, please?
Crossfin's a fintech investment platform. We're actually made up of three different platforms. We've got a very early stage VC investment platform called Crossfin Ventures, where we back founders and seed-based angel investment type startups. Honestly, it can be from an idea, but it's always nice when there's better traction. You focus on the jockeys and the sort of solution that they're trying to solve in the market and see if there's something exciting there and back them and try to get something going. And we've had quite a few successes there. Some early stage businesses have made it to quite significant businesses today, like Yo-Yo and Ikorka. We also have Crossfin Mauritius, which is more of a pre-Series A to Series A based fintech investment platform. That is, as the name says, based out of Mauritius. And we do look at investments outside of South Africa through Crossfin Mauritius. And then most of our time is spent on Crossfin Holdings, where we invest in mature cash generative fintech businesses, where we invest alongside founders and entrepreneurs to really help with growth equity, to grow the businesses into new markets with new products, or to assist with mergers, acquisitions, MBOs, etc. And we've got some nice businesses in the portfolio. Business Adumo, which is one of the largest independent acquirers in South Africa. We've got Akelo, which is focused on financial inclusion in South Africa, and Cybrin, and then Ikorka, which I mentioned earlier, where that journey started when they were a seed investment 12 years ago.
That's fascinating, Anton. And I mean, what you don't often find is people that actually, work along the entire value chain, like from, working with companies in very early stages and later, because, I mean, what you need to offer in terms of support and capital is so much different in the different phases. Like how's Crossfin navigating those, having been or being able to give startup advice in the very early days, pre-customer, as well as, scale and growth advice when you get to the size of Ikorka?
I mean, it's difficult because it changes all the time and it keeps you on your toes, but it's actually what we enjoy. And it's a formula that we have found has proven most successful. Because if you can continue along the journey from early stage all the way through, there's an amazing relationship of trust that gets built. And what we found is that if businesses don't feel like someone's got their backs, and that there isn't someone there that will assist and follow on with funding if they're on the right track, they're always looking for the next raise, and their focus is in the wrong place. We need their focus to be on the business and solving for the customer. And if that's the case, then we've got their backs and we can grow with them as they go. And we can bring in relevant co-investors along the journey as the business demands. With the Ikorka in the early days, the first 5 years was difficult, and there were a lot of hard conversations. And it took a lot of our time and support, but it was an amazing journey. And the founders are really, really great guys, and they responded really well to it. But once they had learned everything that they needed to learn in terms of getting the product market fit right and getting the metrics right and understanding exactly what they got for every extra dollar of marketing spend, etc., they were ready to scale. And with that, they would need a lot more money. And then we were able to go out to the market and bring co-investors like APIS and the IFC into the conversation as well. And with that funding, we were able to really scale the business. So I mean, to answer your question, early stage takes a lot of our time, a lot of mentorship, a lot of coaching. Later stage, I mean, I don't spend as much time with the guys that you call now because they know exactly what they're doing. And if I'm in their way, it's just going to confuse things. I'd rather let them help, which is awesome. And then you bring other co-investors along to help where required. But over time, the team really, needs to be let loose to do what they do best. We don't want to get in their way.
That's fascinating. And I mean, there's fintech. Obviously, you guys have been around since, the word fintech, probably pre the word fintech. Back in the day, I mean, you mentioned Yo-Yo, but Yo-Yo was a company called Y Group before it was called Yo-Yo. And I mean, Y Group, that's 15 years ago. Like, how did you get into fintech? What was the investment thesis back then, and has it changed, and how has it changed over time?
Well, how did I get into fintech is a different question to what was the investment thesis. And it all depends on the definition of fintech. So when we invested in Y Group at the time, we used to call it transactional solutions or transactional services. And payments was a very big investment fee. But fintech, if I think about it, goes right back. And my early days, we had a family business. We built a point of sale solution in the Western Cape called QuickTool. We grew that in the 90s to be the largest independent point of sale business in the Western Cape. We were in most of the independent retail outlets when malls like Century City or the Waterfront opened back in the day. And we basically integrated those businesses to payments in the 90s. So, first to teach retailers to use a computerized point of sale till as opposed to a cash register. Then we had to teach them the merits of integrating a payment device and accepting card payments directly through their computer till in the 90s. It was like, it was leading edge, it was painful, but paid off over the years. We exited that in 99. And then I joined MWeb Business, where we built a product called SafeShop under the division that I headed up. And again, we were at the bleeding edge of e-commerce, and e-commerce enabled, Pick and Pay, and Next Florist, all the early sort of e-tailers, get people to think it was safe to shop online. We formed the South African Forum of E-tailers, which I chaired, just to try and let people know that if there was the safe logo on a website, you could trade there, because if you ever had a problem with your transaction, you could call us and we'd make sure that everything was resolved, because any participating with the safe logo was a trusted merchant like a Next Florist or a Kalahari or whatever it was. We also built out
taking me back.
Kalahari. I promise you that platform was Shopify 10 years ahead of the market, which was a bit but we had a lot of fun building it. So yeah, I class all of that as fintech. But after my web journey, I joined the UCS group, where I met my partner, Dean. He was the deputy CEO of the UCS group. It was listed on the JSE, and it was focused on investing in businesses that supported retailers, retail software, retail services, retail hardware, anything from SAP and JDA all the way down to businesses that competed with my old company, Retail Automation. And one of the businesses that we had invested in back then was Garp, which funny enough, we still invested in today. Over time, the founders of UCS retired. We actually sold 75% of the UCS assets to Business Connection in 2011. And Dean and I helped the founders. We basically delisted the company and continued to invest off balance sheet under capital investment. And in those days, called FinTech, Transactional Solutions, I was responsible for the Transactional Solutions division. And that's when we started investing behind Bevan and Barsi with their idea, which was Y Wallet at the time. It was a mobile wallet for smartphones, which we integrated to retail point of sale, and actually were able to do a card transaction on a feature phone at point of sale. But it was, again, too far ahead of its time. So we pivoted. We helped Barsi pivot the business to Y Group, which is mobile rewards and loyalty. And today that business is flying. It's called Yo-Yo. If you use your Vida app or your Kauai app or any of those kind of loyalty programs by Yo-Yo. Yeah.
Jeez, Anton, what a story. I want to go back to the beginning of it. Like, you did point of sale devices. Was there a separate card machine? And then it was still swipe, right? I mean, this was pre-chip and pin.
Way before. Yeah. It was MagSprite. Eventually you had a MagSprite reader that you plugged into the computer that read it through the point of sale solution and then went off to the bank.
No way.
Yeah.
That's fascinating. Okay. So I mean, that's like the dawn of credit cards. I mean, before that, they used to have that ink thing, which you have to like.
Let's not say there was business that did check reading. In fact, we still do through Cyber, which is one of our assets for banks in Africa. Yeah.
That's insane.
I wonder, like, Anton, a day in the life, right? Because all of these things you're talking about the 90s, and I'm sure it exists to this day, where people like yourself actually live in the future, right? So when iKhokha rocked up at your doorstep, I mean, they had a vision, I'm sure, but you had to look into the future to understand that vision. I just, how does that mindset work for you? I just want to get into, like, when does someone see that opportunity and say, well, wow, this is a great opportunity. Maybe not right now, but this is going to be big in X amount of years. Like, how do you see that?
Yeah, I suppose it depends on the nature of the individual. I am by nature forward looking. So I suppose I always see what I think is more of an opportunity that sometimes it materializes, or I think it could happen sooner than it does. And these things always take a lot longer to materialize. iKhokha, we thought would turn on in 5 years. As you can see, it's taken 12. But ultimately these things do come good. So you do look at other markets. So we could see what was happening with Square in the US and with PayPal in the US. And we could see how things were evolving. And we actually thought, and I had spent some time, I actually lived in the States for a year after varsity. So I actually noticed that South African banks were ahead of the American banking system. And you could see if they were getting traction, we already had a more complicated solution. We had an EMV chip and pin type card, which Square couldn't solve for. They just had the Mag, and it was a very simple device. When the iKhokha came to us, they basically said, we'd like to build the Square for Africa, but that means it needs an EMV device, which we challenged them on because there weren't really any readily available devices that could accept chip and pin. And Matt, who's one of the founders, said, no, but my father, Clive, he's actually one of these rocket scientists that can build this thing for us. And we backed them and they built it. I mean, I've got the original device, which plugged into the sound jack on a mobile phone and accepted a card chip. So we knew that we could de-risk the investment if they could just build that device. We had Y Group, which is Yo-Yo, and they knew how to build really good apps for mobile phones. So they could help the iKhokha guys build their first app. And we had the Destiny payment switch because we've always followed a theme of investing behind payment businesses first. And we knew that we could integrate iKhokha to that switch so that they could actually switch transactions. The app was built by Y Group. If they just brought out this device, we thought we had a business. And it actually worked out quite well. Over time, you could get devices a lot more cost effectively from Europe and the East, and they eventually replaced their own in-house devices with things that they could buy abroad and just focused on building their merchant base, which is the most important thing of their business. Building the hardware device, just a way to get into the market. But once those were readily available, they had first move advantage. They could focus rather on building their merchant base. And that's what they use.
Anton, you mentioned something there, like one of the themes of where you invest in is payments. But can you maybe elaborate a bit on that? Are there any other themes in fintech that make sense? I mean, fintech today is quite broad, right? So when it comes to Crossfin, like what are the areas that you focus on?
Fintech is very broad. But if you go back to our early days at Capital I Investment and UCS, we used to call it transactional solutions first, because behind every relationship between a merchant and a consumer or any person, there is some kind of transaction. And in our world, to enable fintech, basically you're digitizing the financial services landscape. And the beauty of fintech, because it's digital, you're starting to get data. You're getting transactional records of whatever is happening, whether it's a loyalty transaction, a gift transaction, a savings transaction, or a payments transaction, it's data. And for us, transactional solutions are the rails. And our investment thesis is to invest behind businesses that create those rails. And then separately, we either build products and services that you can put down the rails or invest behind other complementary businesses that can leverage those rails. A very good example is we were invested in SureSwipe and eCorca, and SureSwipe is now part of Adumo. Those were very strong payment acquiring businesses in South Africa. They're pretty much in the tier 3 market in SureSwipe and tier 4 with Yoko eCorca. And then we invested in a business called Retail Capital, which provided merchant cash advance or funding to merchants on the back of their transactional history. So the more transactional data they could see, they were able to put a merchant cash advance proposition to the merchant on the back of his acquiring transaction data that we were able to provide them. And they used to do that manually. Post our investment in them, we were able to encourage the two businesses to integrate and create it as a what we call the low touch digital solution. So eCorca would pass the transactional information with the consent of the merchant to Retail Capital. They would process it through their rules engine and come back with a proposal to provide funding to the merchant. And that offer would be made through the eCorca device automatically. And if the merchant accepted it, the funds would be in their account the next day because eCorca was already settling their card transactions into their account, so they could settle the funding in. It was a good joint venture relationship between the two businesses, arm's length commercial relationship. And then immediately, on the back of the card collections, eCorca could start help settling or paying down the funding arrangements with Retail Capital. So it de-risked it, from a Retail Capital perspective. It was a win-win for both parties, but even more so, it was a win for the merchant because it still is very difficult for SMEs to get funding the traditional way. There's so much red tape and so many hoops that you got to go through that this kind of fintech solution between non-banks that are more agile became quite attractive. And obviously with more funding, SMEs can grow their businesses faster and get more funding if their businesses grow because they've got more transactions, which gives more history and makes it more credible for them. So that was a really good opportunity and an interesting journey. We did eventually exit Retail Capital to time back, but that relationship between eCorca and Retail Capital continues to grow. And I think it's done really well for SMEs and uplifting the SME base in South Africa. So it's a nice financial inclusion story.
That's awesome. I mean, you mentioned the exit. There was also a demo to Lesaka Technologies. So
so
a recent one.
That's very recent. In fact, it's still in process, and we're hoping to finally close that out by the end of this month, early next month. But most of the regulatory hoops have gone through, so we're pretty much there. But that's been a long journey, and we acquired different businesses along the way and consolidated them under the Adumo structure as a independent payment acquirer in South Africa, and actually the largest. And that started back in the UCS days with some businesses like Innovation and Destiny and Garp. Over time, we exited Garp. We acquired SureSwipe. We built eCorca. We then acquired Garp again because it made sense in the larger story. And started putting these businesses together. We acquired Wirecard for an online gateway, Adumo Online, and Edenred, Adumo Payouts, consolidated them all over the years to what is Adumo today. And then actually, eCorca was growing so quickly that we thought it makes sense to spin that out. eCorca now stands separate to Adumo. And we have just recently exited Adumo to Lusaka, which is also very exciting because the journey continues under Lusaka for everyone that has been part of the Crossfin story today. So same as retail capital.
Yeah, and I'm sure Lusaka is doing some really interesting things themselves. So I'm sure the relationships, having good relationships with them, there might be more opportunities that will pop up in future. So definitely exciting. So Anton, buying and selling a business, this is to you, this has been something you've been doing for years, but I'm interested to know, how does this work? What is the process? Is it like selling software? You do a cold outreach and go, hey, I have a business you might want to buy. I'm sure it's not like that, but I'd love to hear how that works. So take us behind the scenes of how this works.
There's many ways of finding opportunities to invest in businesses. So we've been in the market for a long time. We keep our eyes and ears out. And there are businesses that we've had an eye on for a long time, or actually more importantly, there are jockeys or entrepreneurs that we've had an eye on for a long time that we really want to work with. So, when an opportunity comes knocking, like I had a very good relationship with Carl from Retail Capital, and you just stay in touch. And at a certain point in time, he came knocking and said, we are looking to raise more funding. Would you be interested? And so you start getting involved and looking at the opportunity. But because you've been close to the business for 4 or 5 years, you know exactly whether you are or aren't interested. And if you are interested, you then got to apply a lot of time and energy to really get to understand the business, get your own valuation parameters together, understand what they're wanting to do with the funding and whether it makes sense, whether it fits within your investment horizon, because different people have different investment horizons. And at a certain point, you also need to exit to return money to your shareholders. So you've got to make sure that all of these blocks align. And for me, from a Crossfin perspective, that it's a very complementary asset to our broader portfolio, and that it'll add value to the larger ecosystem, because we're very much an ecosystem play. Even if we exit a business, you're still part of the Crossfin armada or portfolio that we call it. Still part of that ecosystem. We still want to leverage and work on opportunity. So you've got to make sure it ticks all those boxes. But once you do, you still then, we as a team have to go and put an investment memorandum together and go send it to our investment committee. And that's hard, because now you've got to convince someone who's not close to the business that this is a really good opportunity, and you've got to go and fight for it. And amongst all the other opportunities that potentially they could be looking at the same time. And if you get that over the line, then you've got to obviously go through all the heavy lifting of the legals and the contractual work. And these things don't happen overnight. It's a lot easier in the earlier stage, smaller businesses. And also we can move a lot faster because it's smaller checks and smaller decisions. But as you go up the value chain, as the checks get bigger, as the transactions get bigger, these deals can take 6 to 12 months to close, as opposed to an early stage transaction. You probably turn around in 3 months if you're really interested and everyone's on sides.
Okay, fascinating. Tell me, Anton, you've now worked with early stage founders like from day zero, and you've now worked with people that have, 12 years in, sell a big business. What is the thread between, people that make it, and you've obviously seen a few that don't make it. If you were to meet a founder tomorrow, what are some of the things you'd love to see that will be signs where you go, cool, this is someone I need to stay in touch with or back?
I mean, the old
question right out of my mouth.
Yeah, the old cliche is passion, but honestly, it is so important. They really have to be passionate about what they're doing and what they're trying to achieve, and they really have to have a purpose, and they have to be very focused. The only entrepreneurs that I've really noticed been really successful through thick and thin are the ones that are able to focus. And I mean laser sharp focus on very few things, but that turn the dial the most. So the guys that try and do everything all the time get lost very quickly. But if I look at the really good jockeys that we've backed over the years, Carl at Time Retail Capital, now Time Bank, Bevan at Y Group, now Yo-Yo, Matt at Corker, and Paul Swipe into Dumo. All of these guys, they are laser focused on the thing that moves the dial the most, and that's what they worry about the most. And you can come to them with amazing ideas and opportunities. They will definitely listen to you, but they'll put them in a queue and say, you don't mind if we look at that next year, because this year you've told me to do this and this is what I'm doing. So success comes with passion, purpose, and focus. And then they've got to be great inspirational leaders. They've got to have a team that believes in them, that believes in their vision, that understands their vision, and that will do anything for them. Because in the early days, it's hard. Everyone's doing everything.
And I feel like in recent months, in South Africa specifically, there's been this, call it the GNU, call it the Springboks, call it Drickers, call it the Olympics. There's been a sense of optimism that's gone around. And I want to understand, are you seeing more potential coming through, more opportunities showing, some founders coming to the table? Are you feeling like there's a good move towards that? Because I think we're feeling it on the ground, but are you seeing it in your space?
So I'm always seeing lots of potential and lots of opportunities. So that hasn't changed, but I'm feeling a much more positive environment, and I'm seeing a lot more activity, and I'm also seeing the funding waking up again, because the funding really dried up. And it's a slow awakening. It's still hard to get funding over the line. And honestly, the last couple of years for any business has been tough. And the guys have had some proper knocks, but they're picking themselves up and they're shaking themselves off. And definitely are getting back on the front foot. I've definitely noticed the energy and the momentum.
Do you think it was a global macro trend that pulled them down, or was it because of what was happening locally and people were a bit hesitant to dive into some risk, let's say?
No, the funding was definitely a global phenomenon. And that was, it started with the Ukraine war and, the Middle East issues, the uncertainty in the state, the macroeconomic climate, funding dried up. The fintech bubble burst a couple of years ago, and it's been a very slow, painful process trying to get funding for any new opportunities, unless you really had something good. But then it was compounded, obviously, by the instability in South Africa pre the elections, and just where the economy was. I mean, I don't think we're from COVID. And then, unfortunately, where we found ourselves with load shedding and everything else, it just compounded. So South Africa was
listing.
Yeah.
So Anton, I mean, you guys were early with the original credit card machine and the family business. Ikolka was early with the, being the Square for Africa. A lot of the business you're involved in is quite early. There's quite a lot of movement in the space in terms of payments, devices being used for payments. Two particular things that come to mind is, the rise on, not necessarily the rise of stablecoins, but at least the conversations around stablecoins and what's happening and what that could mean for the future of payments and banking. And then I think the second thing is, I think most people that are on social would have seen that video of iOS 18 where, they've got this beautiful animation of two phones coming to each other and $1 flies off the one screen to the other one, illustrating the new functionality they want to roll out in the US and I'm sure eventually globally. How do you see the space changing with especially those two technologies coming into the space? You guys have some investments in that could be disrupted with this. Like, what do you think of that? Where do you think the opportunities lie?
So, I mean, the investments that we have, I don't think could be disrupted. I think they could be enhanced, because remember, at the core of what we're doing is we're enabling payments. And what that technology is doing is just giving you another form of payment. So as long as our businesses are able to enable merchants to accept those payments or consumers to pay with those payments, it's just enhancing what we do. But we're not wanting to miss the bus either, because there's an opportunity here. So we have invested in a business called MyPinPad, which basically enables technology on mobile devices to secure and authenticate mobile transactions. They're very strong in the soft POS business, where you can white label their technology to enable your mobile phone to actually be a payment acceptance device. No longer do you need a separate device to accept the card. You can actually tap the card on your phone. And if your phone is enabled, you just tap phone to phone. And they are working with iOS to ensure that they can enable that on their platform as well. And they've got huge traction in the soft POS market, particularly funny enough in South America, where, I mean, the volumes are just so much greater than what we're finding in South Africa at the moment. So MyPinPad is basically covering us on that technology front. And then we've got an investment in an earlier stage business called Moment, basically a technology that enables one to mint NFTs on the blockchain, but it's also a marketplace for NFTs and for digital assets. And the technology is very, very advanced. So it has application in so many different spheres that we're obviously just watching the space. But we invested in Moment purely because we wanted to get closer to blockchain and NFTs and the digital opportunities in that space, particularly how they leverage their marketplace for, crowdfunding, the digitization of real world assets like solar projects and others. So, and I do think that stablecoins, particularly backed by countries, have value because it's an evolution of physical paper money. Still with a reserve bank or someone else standing behind it saying, that has value.
What impact do you think all the new licensing that's going to come through for the whole space? Because it feels like we were waiting, like everyone was anticipating it, and nothing seems to have really gained traction there, unless I'm just not on top of things. But I'm not really seeing, where this thing is going now that they've issued all these licensing to the Moments of the world.
Yeah. We just have to see how it plays out. Licensing brings additional costs from time to time, and it does bring delays. But if you are on the right side of it, it also creates a bit of a competitive moat. So we'll just have to see how it plays out. Obviously, payments environment that we work in is heavily regulated, and it comes at quite a high cost to maintain the infrastructure and environment that you have to look after to be able to work with the likes of your Visas and MasterCards, etc., because they've got very rigorous rules. So, these just bring cost, and sometimes a bit of complexity and a little bit more delay in a transaction because of additional messaging and things that you've got to bring into it. But everyone's got to work with it. So let's see how it plays out.
Are you still feeling bullish on the space, considering all the AI hype came and took over and kind of left, the blockchain? No one's talking about it as much. Are you still feeling bullish? It's a patient game, and there's still a lot of opportunity in the future.
It's just another technology, just another enabler. For me, the value isn't in the technology or the AI hype, or the value is in the problem you're solving for the consumer and whether he's prepared to pay for it. And if he is, you've got a product if it's profitable. If I look at what we're doing today, it's no different to what we did in the 90s. It's just we're using different technology. We might be doing it a little bit better, but the need is still the same. The merchant's still got the same requirements. He's still running a shop. He's still trying to manage his cash, his stock. He needs funding to grow. He needs insurance. Got all the same requirements. You're just servicing him hopefully more effectively.
So Anton, on that, I mean, if the more things change, the more they're the same. Are the opportunities in fintech in South Africa still the same, or where would you say are the most opportunities in fintech in the next 10 years in South Africa?
I think that the opportunities are always finding something novel that hooks the consumer or the merchant that around which you can build a sticky value proposition, because the more merchants or consumers you have a strong relationship with, the more valuable your business ultimately to a larger environment that wants access to that merchant or consumer. And ultimately, that's where you might be looking to exit your business or grow to compete directly against them. I mean, for me, the future is building really great businesses with products and services that the consumers really need, that it really makes a difference to them, that ultimately an incumbent will want to partner with you for, so that you can basically leverage off each other's products and services and build it and have a really even better value proposition. I do think it's more in partnership than competition. I don't think everyone should go and try to compete against everyone else. I think if everyone sticks to that and partners, it uplifts everyone.
Yeah, because it's almost, I mean, I like that, because it's almost, if I think about fintech, the last place I would go is payments, because I feel like everyone in their dog is in payments, and you've got guys with deep pockets there. It's almost saying, well, I'd rather go elsewhere. Like payments feels crowded. Is it crowded?
Payments is most definitely crowded. But it's the beginnings of a broader value proposition.
I see Troy Gold is on your portfolio as well. I just got an email from them as we're speaking right now. What's the game there? What's the play with them? And what did you see there? Because that's also a very interesting proposition.
So, I mean, when we first looked at Troy Gold, and the angle was just enabling people to save and being South African, save in gold, because, a lot of our history and heritage is grown on gold, which is an asset under our soil. And the problem with saving in gold is it's out of most people's reach. Not everyone can afford a Kruger Rand I think a gold bar is $1 million now. But what Troy Gold enabled you to do is they bought the gold, put it in a vault and fractionalized it. And then it enabled you to buy as much of that gold as you wanted, whether it was 10 Rand or 100 Rand or 1,000 Rand or 2,000 Rand. And they've enabled mechanisms where you can basically have a monthly debit order or a weekly debit order where you can just set it to save in gold. So, for me, it was just a really nice savings product where you could save in something that appreciates in value over time. So the longer you save, the more wealthy you will become on that. But then also, that is a really good hedge against the Rand or any other African currency, which depreciates against the dollar and the euro. So, I mean, there are many applications. I personally recently have used my Troy Gold card to travel overseas, because I'd rather be spending gold than rands, because I'm converting to pounds or dollars. There's many use cases or applications. So it started as a feel-good savings type alternative, but then it's sort of grown into enabling people to live in gold. So the guys that didn't like fiat currency, but found Bitcoin and all the rest too volatile, we gave them an alternative. Well, you can actually live in gold. You can bank in gold. We've now linked it to a card. You can actually liquefy your gold assets, because now it's actually a credit card. So you can actually spend against your gold holdings. Like it's a liquid savings product. Although gold is supposed to be a value of wealth, you can now actually liquefy it. And if you've got short-term liquidity issues, you can use it as a credit card. Yeah, let's see where
I'm really planning a trip. I never thought about it. I want to travel in gold. It sounds pretty awesome.
Some of your gold.
Yeah.
Exactly.
Just remember, you do need to notify them of the country you're going to, like any other card.
Okay.
So open the bin now.
Yeah. That's interesting. So we're going to probably start wrapping up soon. But Anton, I'm curious. I mean, we've spoken a lot about the fintech space, and you said that the payment space is quite packed, quite a busy one. Like most founders for a long time, if you asked them what they were doing, it was in fintech. So if you weren't focusing on fintech, and let's not say AI, what other industries would you be focusing on? Where else are you seeing opportunities for founders out there?
Sure. I think there's lots of opportunities everywhere. I've always liked sort of the ed tech play, and I like the property tech play. I mean, I think models like the Airbnb model are really interesting, and it's really working well. But as you notice, I do have a slant towards technology. And that's just because of my background. It's always been related to tech. I think, if you're a founder and you're looking to start something, first of all, figure out what you really like and then get involved in that. I mean, you can build a really great travel company if you want to go around the world traveling. Yeah, but you have to be passionate about whatever it is that you want to get involved in. And I've seen businesses that are ridiculously scalable and things that I've never even thought about. So yeah, there's logistics. There's the Uber for trucks is a model that I've seen recently, which is amazing. Trucks go one way with goods, but they come back empty. But so guys have figured out how to fill the truck coming back. It's a great business. Yeah.
Yeah.
And there's lots of opportunities around.
I like that. I mean, it's that book, and it's quite a famous saying, fall in love with the problem, not the solution, or fall in love with the space, fall in love with the industry, and then the rest will follow is what I'm picking up.
If you want to live,
Rene,
you've got to do something you enjoy, because it is a long road.
I think that's something. So we're going to probably go into the lightning round, and we ask a certain question, but that does come through. It stems a lot. Like, find the passion that you're looking for and stick with it. Focus. You've mentioned a lot of the threads that these founders are talking about that we interview every week. Find the passion, find the focus, and get the grit to pull it out. Rene, any last questions before we go into the lightning round?
No, I'm good.
Cool. So Anton, lightning round, it is what it is, what it sounds like. I'm going to ask you a few questions. The first thing that comes to mind, just give us the first answer that comes to mind. So the first one is very easy, but what book would you recommend a founder to read?
The first book I read was Richard Branson's, and it was just a feel-good entrepreneurial success story. So that came up top of mind. But I mean, I consume autobiographies. I read, honestly, at least a couple a month. So there's tons.
Which was the last one you read?
The last one was actually Sia Khaleesi, Rise, which is also slightly different, but a great story. Yeah.
I got it as a gift. I haven't read it yet. Is it good, eh? Okay.
It's a nice, easy read. It's worth it.
Nice. We've kind of touched on it already, but what we like to ask is for founders to share their advice that they've either received or something they've learned that they feel needs to be passed on to an up and coming founder.
It comes down to focus and manage your cash flow. If you cannot manage your cash flow, you haven't got a business. And if you can't sell and a customer doesn't buy and pay for your product, you haven't got a business. So focus on managing cash flow. Definitely.
Nice. You may not be biased on the next question, right? You have to be honest on this one.
Yeah.
What is your most loved South African app that you use daily? You can't be biased.
South African apps that I use daily, because I mean, sure.
Or in general, your most loved South African app or technology.
It's a difficult one. I mean, I use all the different banking apps quite frequently, and they're all good for different reasons.
Okay.
If I was biased, I'd say I really enjoyed the Vita app. I always had. It was one of the first we did through Y Group, and it's still, I mean, I used it again this morning, and it's still a seamless experience.
Brilliant. I like that. And then lastly, our last guest was the founder of Melon Mobile, and they did a billboard campaign that's underway, and it's a question I've had in the past. If you had a billboard, what would you put on it?
Sure. I think I would be more into trying to uplift society at the moment than trying to sell a product or a thing. So yeah, welcome. If I'm living in Cape Town, if the billboard was here, to be welcome to Cape Town, so that is a special place, or enjoy the journey.
Love it. Cool. Well, we'll finish up there. Thank you very much, Anton, for coming through and sharing your insights and experience. Really keen to see how your portfolio grows, and there's some really exciting brands in there which we should dive into. So thank you. Rene?
Okay. Thanks, Anton.
Thanks, Bobby. Appreciate the time. Cheers.
Cool. Thanks so much. Cheers.